April 2025 is bringing some major tax and financial changes that will impact businesses, employees, and pretty much anyone managing their money. Today, we're breaking them all down: what's changing, who it affects, and what you need to do about it. Let's get into it. Starting in April 2025, the national living wage for those aged 21 and over will increase by 6.7%, rising from £11.44 to £12.21 per hour. For younger workers, the increase is even bigger. The minimum wage for those aged 18 to 20 will jump by 16.3%, going from £8.60 to £10 per hour. Apprentices will also see a significant boost in pay, with their minimum wage increasing from £6.40 to £7.55 per hour, which is a whopping 17.2% increase. If you're an employer, it's important to factor these increases into your payroll and your budgets for next year. And if you're an employee, make sure to check your payslip in April to confirm that you're being paid the new rate. From April, employer national insurance contributions will increase by 1.2%, bringing the rate up to 15%. On top of that, the threshold for when employers start paying national insurance will drop from £9,100 to £5,000. This means that employers will pay a higher percentage of contributions on a larger share of their employees' salaries. However, there is some relief for small businesses. The employment allowance, which helps businesses to reduce their employer national insurance costs, will increase from £5,000 to £10,000. This change means that 865,000 employers will pay zero employers' national insurance contributions next year, while around 1 million more businesses will pay less or the same amount as they did in the previous year. For small businesses, this increase in employment allowance will essentially cancel out the effects of the national insurance hike. If you receive benefits, there's a small but important increase coming this April. From the start of the tax year, benefits will rise by 1.7% based on the inflation rate from September last year. While it's not a huge jump, this adjustment means that those receiving benefits will see a slight increase in their payments. Additionally, there's a change to the carers allowance earnings limit. From April, carers will be allowed to earn up to £10,158 per year while still being eligible for carers allowance. This gives a little more flexibility for those who are balancing work with caregiving responsibilities. Good news for pensioners. The state pension is increasing by 4.1%. For those receiving the new state pension, the increase will result in an additional £9 per week under the full rate. If you are on the old state pension, for those who reach state pension age before 2016, your payments will go up by £6.95 per week. While this may not seem like a major increase, for many retirees who rely on their state pension, even a small boost can help cover everyday expenses. If you're looking to buy a home in 2025, you should know that stamp duty thresholds are changing. Stamp duty rates are currently operating at reduced levels, a measure introduced by the previous government back in October 2022. However, these reduced rates are not being extended by the current government, meaning stamp duty will return to its previous rates. For first-time buyers, the property value at which stamp duty kicks in will decrease from £425,000 to £300,000. This means that first-time buyers purchasing homes valued between £300,000 and £500,000 will now have to pay 5% in stamp duty. If you're buying a second home, you'll now have to pay stamp duty on any property over £125,000 rather than the previous threshold of £250,000. For properties priced between £125,000 and £250,000, a 2% stamp duty charge will now apply. These changes could add thousands of pounds to the cost of buying a home. So if you're planning to purchase property soon, make sure to budget these increased expenses. Investors, landlords and business owners, this one is one you need to watch. Capital gains tax is set to increase, making it more expensive to sell certain assets. From April, the lower capital gains tax rate will rise from 10% to 18%, while the higher rate will increase from 20% to 24%. If you're planning to sell investments, rental properties, or any other taxable assets, it's worth considering how these changes could affect your profits and whether you need to adjust your investment plans. And that is everything changing in April so far. How do you feel about these changes? Will they impact you? Let me know in the comments. And if you found this video helpful, hit like, subscribe and turn on notifications so you don't miss more updates from us. See you in the next one.